We told you gold was a bubble. We told you silver was a bubble, right? They've popped. We're writing the obituaries on the gold and silver bull market. I think we're premature. Now, I don't think you're going to immediately hit new highs, certainly not in silver, because, new highs are 30% higher, right? You're at $90. Bitcoin is now down 60% priced in gold since its November 2021 high, right? This is 2026.
According to Peter Schiff, the recent dramatic crash in precious metals, where silver plunged nearly 26% and gold dropped around 9%, should be viewed as a necessary pullback rather than the end of the bull market. He suggests that many investors had been hesitantly waiting for such a correction to enter the market, and he declares that this phase is now over. In his view, the obituaries being written for the gold and silver rally are premature, and he maintains that the long-term upward trend remains intact, despite the sudden and severe volatility. Schiff also highlights a critical divergence between the paper market and the physical market during this sell-off. He notes that while paper prices collapsed, the premiums on physical gold and silver coins actually widened because buyer demand remained robust. He is particularly bullish on mining stocks, predicting that they will recover and reach new highs even before metal prices themselves fully rebound. He argues that the fear keeping investors on the sidelines has now played out, creating a prime opportunity to acquire mining stocks as market confidence slowly rebuilds. If you found value in this breakdown, smash that like button, subscribe, and share with other investors. We are here to provide you with sharp analysis from prominent voices in the financial world.
It was getting difficult, for people to buy silver when it was rising so fast. It was a little scary. It's not nearly as scary now that you know where the top was and that you're clearly not buying it, right? You're buying a very substantial pullback. Yes, you're still having to pay $90, which may seem like a high price, but it's not $120. Some people paid $120. So you're getting a good buy at $90. And the same thing with gold. $5,000 gold, yeah, it seems expensive, but somebody paid $5,550. So you're not buying a high. And of course, those are not the highs. This bull market has got years and years and years to run. So we're not even in the vicinity of the high. But, there are a lot of people, I think, that were hesitant to come into the market because they were waiting for a pullback. Well, we had it. It's over. You don't have to wait for it anymore. It's now behind us. I think that's going to be particularly important in the mining stocks, because I think one of the reasons that the mining stocks were not rising spectacularly when gold and silver were making these new highs. And in fact, the day that silver made its new high above, 121, most silver stocks were down on the day. So investors were very hesitant, thinking that there was going to be a big pullback. Now, they were right. We did have a big pullback, but now it's in the past. So I think some confidence is going to slowly be rebuilt. And I do believe that silver stocks and gold stocks will make new highs before gold and silver make new highs. And that's very bullish. But it also means that it's a great opportunity to buy into the gold and silver mining stocks. So don't just buy the physical metals. And you can do that, obviously, at Schiff Gold. And by the way, as I was warning, the premiums have widened. So even though silver went way down, the silver coins and bars that we sold, they went down too, but not as much. The drop wasn't as great because the spreads went up, because there was a lot of physical demand to buy the dip. The big collapse happened in the paper market where there is no physical. So that's another factor that you have to bear in mind. I do expect over time the demand to increase and outstrip the supply. And so that's going to keep pressuring the premiums on, especially the smaller coins and bars, 1 ounce coin. These mining stocks, I'm confident they're making new highs long before silver. I think silver stocks will make new highs by a decent margin before silver gets back above 120, because I think the fear that kept the silver stock investors on the sidelines, I think that will slowly subside as the market starts to repair from the decline and move higher. And this is in sharp contrast to what's happening in Bitcoin. And look, this is obviously not a surprise to my audience. I have been saying this. I've been warning about this. I've been telling you, crypto guys, that the game is over and you got to get out while you can. Well, Bitcoin right now is at 72,500. Now, it's down. If you want to compare it to gold, Bitcoin right now is 14 and a half ounces of gold. In 2021, at its peak, it was 36.3 ounces of gold. Bitcoin is now down 60% priced in gold since its November 2021 high, right? This is 2026. Now, it's not November, but it's more than 4 years ago, not quite 5, but down 60%. And think about all the things that have happened with Bitcoin, because back then we didn't have the Bitcoin ETFs yet. We didn't have the Bitcoin president. We didn't have the Bitcoin strategic reserve. We didn't have MicroStrategy, and I'm about talk about them in a minute, and all the other copycat Bitcoin treasury companies, right? Despite all that, it went down by 60% in terms of gold. But even if you want to price it in dollars, Bitcoin is less than 6% above its 2021 high in dollars. In dollars. What a lousy return on Bitcoin. And remember, its whole claim to fame, the whole reason you're supposed to buy Bitcoin is because it's the best returning asset. Yet it hasn't been.
Finally, Schiff draws a sharp contrast between the performance of precious metals and Bitcoin to reinforce his skepticism of cryptocurrency. He points out that despite Bitcoin trading around 72,500, it is effectively down 60% when priced in gold since its peak in November 2021. He cites MicroStrategy as a cautionary example, noting that the company is currently underwater on its massive holdings, with an average purchase price of roughly $76,000, higher than the market value. Schiff uses this to argue that for most recent investors, Bitcoin has been a lousy asset compared to gold.
And the best proof of what a lousy asset Bitcoin has been for most people, not for everybody. Yeah, if you bought it early enough, if you got in on the ground floor, yeah, you cleaned up, of course. But if you got in the last 1, 2, 3, 4, 5 years, which is when the vast majority of people got in, it's been lousy. And the best example is MicroStrategy. MicroStrategy's average price on about $55 billion spent buying Bitcoin is over 67,000, excuse me, just over 67,000. I mean, 76,000, excuse me, just over 76,000. We're now barely above 72,000. So he's down about 4,000 per Bitcoin. I mean, what is that, 6% or something like that? He's lost money on the Bitcoin. The biggest Bitcoin buyer in the world has lost money.